Right, good afternoon then everyone, as we are at the end of another week of trading on Friday the 24th of November. We'll have a flick across the markets to see what's gone on in a pretty quiet week on the economic calendar and in markets. Certainly today and yesterday extremely quiet due to the holidays in America. And the meeting out of Australia, minutes from their last meeting, should I say, did suggest the potential for one or even two more rate hikes from the RBA. They suggested they didn't really need to hike rates at their last meeting, but they said they would rather be ahead of the curve rather than behind the curve. The last governor in charge, Governor Lowe, was behind the curve on a lot of things. Michelle Bullock, I think, wants to reverse that and try and be ahead of the curve, which is a nice change for central bankers. Over the last number of years, 2-3 years, they have been behind the curve on pretty much everything. So, nice bit of a change up, but does that result in much meaningful upside? It has a bit over the course of this week at certain points, but pretty quiet week really in terms of economic or in terms of markets across the board. Inflation from Canada, consensus 3.2, actual 3.1. That was the only one that missed estimates. Everything else was really in line, so not much to see there. Bank of Canada want inflation to come down. Inflation is coming down. It's not surprising in either way. Not coming down more than anticipated, not coming down less than anticipated. So pretty much in line. So again, not much to see there. The minutes from the Fed did somewhat push back on markets' hopes that there would be an interest rate cut. Markets were beginning to price an interest rate cut, even a 30% chance of a cut in March of next year, which, I mean, it's a bit too early really, isn't it, with economic data. Not fantastic at the moment. Over the last few weeks, you've had a miss on NFP, miss on the unemployment rate, miss on CPI, miss on PPI. Durable goods orders this week down 5.4% with a consensus of minus 3.1%. So you've had a raft of kind of weak economic data from the US lately. I say weak, it's still decent. I mean, it's still not bad economic data, but it's weaker than anticipated. So you're getting a few misses across the board. It's not really a need to continue hiking interest rates, but ultimately, at the end of the day, it's not enough to then go and suggest a cut in 3 or 4 months' time. So, I'm not so sure about the market's point of view on that one. But the Fed have pushed back on that. Said they've got no clear idea of when there will be a rate hike, and did push back and say certainly not till later on in the year, which is sort of I would probably guess as a correct. Some economic data out of Germany. The manufacturing PMI was pretty positive. Well, not pretty positive, still below 50, but you can see four straight months in a row that has now risen. So business conditions slightly picking up across Germany in yesterday's session and at the moment over the last few months. So again, it's below 50, so not fantastic, but starting to pick up again. So that's maybe something to watch, something to keep an eye on. You can see business climate figures slightly below consensus, but ultimately above the previous as well. So some forward-looking indicators for the German economy picking up slightly. They are still negative, but picking up slightly, which is a bit of progress being made on the German side of things. It hasn't really resulted in much movement across euro dollar, but something to keep an eye on nonetheless as we head forward into the coming week. Some CPI from Japan, previous 3%, actual 3.3%. Trading economics forecast 3.2. We didn't get a consensus on this for some reason. Have a look at dollar yen. Dollar yen not doing too much by any stretch of the imagination. So none of this economic data has really impacted markets too much over the course of this week. Budget from the UK, the latest budget. Pretty much more money for everyone. More money for people who are on minimum wage. The minimum wage is due to rise. National insurance due to cut between the tax limit of 12.5 grand and 50 grand. Not sure the exact figure, but 12.5 and 50 we'll go with. So a reducement of 2% on the national insurance between those figures. Also an increase to pension payments. So pretty much everybody will get a boost. There's obviously a number of other things that they did suggest, but everybody really seems to get a boost, and obviously naturally want more people in work to be able to pay for that. So more money for everyone. It's really just in line with inflation. Obviously inflation grows, people need a bit more cash, so nothing out of the ordinary. Cable did sell off initially off the back of that. You can see this move lower on Wednesday, has rebounded and pushed higher, so I don't think markets are too unhappy with it, but again, that is against the US dollar. Bit of underlying US dollar weakness makes a bit of sense. But on the chart you can see equity markets continue their grind higher. I haven't really done too much in yesterday and today's session. just chopping sideways, but the S&P, the Dow Jones, the Nasdaq, the Russell continue their grind higher. Maybe not so the Russell, but the S&P, the Dow Jones, the Nasdaq continue their grind higher. The DAX, the Euro stocks continue their grind higher. The FTSE's just all over the place at the minute. So these five continue their moves higher, which is what we were looking at on Monday. We were looking for stocks higher, yields lower, the dollar lower, which is pretty much what we've got. I mean, the dollar is lower at the moment. It'd be interesting to see does it break through these lows. The near-term lows are kind of 103.50, just above 103.50 on the dollar index. These kind of near-term highs at 109.20 on euro dollar. But for the large amount of, or for the most amount of the assets, I mean, you can see dollar Swiss kind of hanging out at the lows. It's just chopping sideways a bit. Ultimately, Aussie, Kiwi, Euro and Sterling are still bullish. Dollar Swiss, dollar CAD, dollar Yen probably still bearish. Dollar Yen a bit choppier and a bit difficult in around here, kind of volatile range, lower aggressively, higher aggressively, but ultimately the direction is still there on these three. The direction is still there on dollar Swiss. Dollar CAD is making lower highs and then equal lows, so kind of a messy descending triangle across dollar CAD. So still underlying bearishness in the US dollar, certainly from a charts perspective, and in my opinion from a fundamentals perspective. Yields continue to be suppressed. Any spike higher in yields is being sold back into at the moment. Any spike higher sold back into, so they continue to be put under pressure. That's bonds being supported, but yields under pressure. So as long as these keep down, and as long as these are subdued, it's likely to continue to be a negative factor for the dollar, likely to continue to be a positive factor for the S&P. Yields lower cause gold to go higher, gold being a zero yielding asset. When yields rise and you can get more yield on treasuries, it makes gold less attractive. When you get less of a yield on bonds and treasuries, should I say, you get more, or the price of gold rallies. So yields lower, gold rally is pretty easy correlation. Oil's a bit all mixing up my words. Oil's a bit all over the place this week. Back end of last week we had a strong sell-off in oil inventories rising. Report from OPEC suggesting that their exports were down since August on what they had anticipated. Again, inventories building across the US, which is a reason for that to push lower. Then you come in on Friday, a bit of a bounce back, but then you come into Monday, and there's reports on Monday that on Sunday of this week you will get an OPEC meeting in order to cut production going forward. That is dissented on, or has been dissented on, by three African nations. Angola, Congo and Nigeria do not want to cut production to oil. Therefore that meeting on Sunday then got postponed. So it was up, or oil was up off the back of production cuts, or potential production cuts. Now the meeting's been postponed, and then you get the move lower, and oil just a bit all over the place at the moment. So that OPEC meeting postponed till next week. Wait and see as to next week as to whether that does get going in either direction. But we'll keep an eye on that, no doubt, as we head into next week. We do have some PMIs out of the US a little bit later on today. Some, obviously, your trade and your composite, your manufacturing, your services. Economic data not been great out of the US lately. You'd probably want that to go in line with it. Sell dollars again. Does that mean long stocks? Bit of a tricky one today, with the lack of volume going through markets. Obviously, in yesterday's trading session, cash equities closed, bond markets are closed. They are shut early today for Thanksgiving, today for obviously Black Friday. 1 p.m. New York time, cash equities closed. 2 p.m. New York time, bond markets closed, which is then 6 and 7 o'clock our time. So boring markets yesterday and today. Not much to be seen when the US are on holiday, so probably keep my money in my back pocket for the duration of the week. But anyways, that's the end of another week of trading. Not the most exciting weeks. We've certainly had more exciting weeks before. We'll have more exciting weeks again. Looks like stocks are set to close the month the biggest percentage gain since the vaccine-driven headlines at the back end of 2020. So solid month for equities. Santarelli's came a bit early. Does it continue? We'll have a look at that next week.